Live trade alerts, October 2024. These are the large account trade alerts, and you can enroll at beststockstrategy.com/memberships. October 1st, we closed out Google for a $315 profit. S&P fell 54. Volatility was up over 10%. October 2nd, S&P down 15. Then we opened up a 1 DTE trade, picked up $50. Volatility was down 2%, even though the S&P was relatively unchanged. October 3rd, new opening trade, picked up a small credit for $3. Here we bought a call debit spread, and then we financed it by selling 2 of the 160 put options. S&P down 10. October 4th, S&P up 40. Amazon was up around 3%. Here with the 112 trade, which acts as a little bit of a hedge, as long as the market doesn't fall significantly or you don't want volatility to spike up by 200% or 300%, because then those naked put options, in this case the 495s, will end up showing a relatively large loss. S&P up 51. You can see the volatility was down around 5%. October 7th, S&P down around 18, VIX up 10%. I'm not sure why volatility was up so much, given a small decrease in the S&P. Picked up $100 of credit for the 1 DTE trade. S&P down 55. Volatility was up over 10%. October 8th, new opening trade for Microsoft. Picked up $70. And then also we bought a call debit spread and financed it by selling 3 of the 365 put options. S&P up 55. Volatility down over 5%. October 9th, here's another 112 trade, which acts as a little bit of a hedge. And then we also picked up a credit of around $40. S&P up 41. Volatility mixed. October 10th, new opening trade on TLT. We bought a call debit spread, and then we financed it by selling 3 of the 85 put options. We also picked up a credit of $43. S&P down 12, volatility mixed. October 11th, S&P was up. Here's another 112, which acts as a hedge for the election. We picked up a credit of around $40. S&P up 35, volatility down around 2%. October 14th, new opening trade, Berkshire Hathaway. It's a call debit spread, and then we also financed it by selling 2 of the 435s. We're trading at yet another year-to-date high, primarily driven by NVIDIA's recent surge. S&P up 45, volatility down around 4%. New opening trades. You're welcome to choose one. Both of them are call debit spreads financed by put options, and the primary difference is the expiration date. Then about 2 hours later, we closed out the UNH position for around a $300 profit. S&P down around 45, volatility up around 5%. October 16th, TLT, new opening trade, call debit spread financed by 3x of the 87 put options. UNH, we closed out yesterday's trade for a $450 profit, so we made about $750 on that trade. S&P up 27, VIX down 5%. New opening trade for UNH, picked up a credit of $30. Then I provide the spread leg. SPY, a 112 hedge, Only make this trade if you're comfortable owning SPY of 542. SPX Strangle, picked up $80 of credit. S&P about even. October 18th, we closed out McDonald's, picked up around $1,400 of profit per contract. This trade was made in May. I'll send the original below, which I did. S&P up 23, volatility was down around 5%. October 21st, solid day for us. The market is down, yet we're up. We're up around $2,000. S&P down around 11, volatility up almost 2%. October 22nd, 2 new opening trades, B plus grade, picked up $164 for NOC, and then we picked up almost $100 for LMT. Then I provide the spread leg, closing trade for gold, close it out for around a $2,500 profit. For the original, I financed the call debit spread by selling 5 of the 205 put options, and then also by selling 9 of the short-dated call options, which ended up expiring. And I picked up a credit of $17 plus a $2,500 profit when closing it out. S&P down 3, October 23rd, new opening trade in McDonald's. Then I provide the spread leg. MCD is showing us around a $300 profit. 112 trade for SPY, B plus grade, picked up a very tiny credit of $1. McDonald's, I closed out the earlier trade. It says here for a $300 profit. I kept one of the 260s because I like to own it at 260, but it's fine if you close out all of the 260s. In this situation, it shows that I closed it out for $4.99, and then I picked up a credit of $15 from putting it on. So I'm not sure why it says that you closed out for a $300 profit. Perhaps that's a mistake. It's worthwhile to scan your watch list and see which underlyings are showing strength today. Then we had a new opening trade, a 1 DTE trade in SPX. Here's the long message. Tesla reported and is up around 7%. S&P down 54. Volatility was up around 6%. October 24th, stable opening. S&P up 14. New opening trade in Berkshire. Long-term trade. This filled at $1.55. As a spread for the 340, I'd sell the 370 and buy the 320. S&P up 12, volatility mixed. October 25th, solid opening. We're trading at or near our year-to-date high. Google is having a nice day, so that provides us with an additional safety net, and it brings us closer to having the 170 calls be in the money. New opening trade, B plus grade. Picked up $23 of credit. As a spread, I'd sell the 270 and buy the 240. SPX, new opening trade, 1 DTE, picked up $45. S&P about even. Solid opening for last Monday. Closing trade for Google, picked up $124. So basically, I traded $875 of potential upside, yet significantly reduced the downside by closing out 4 of the 6 $150 naked put options. And then we can still make $2,000 if Google rises to 180 by Friday. S&P up 15, volatility was down. Last Tuesday, we close out another Google position for around a $400 profit. So then we have one more. S&P up 9, volatility was down slightly last Wednesday. Then we finally closed out the last Google trade for about an $835 profit. So we made about $1,400 on this trade. S&P down 19, volatility up with the VIX up around 5%. Last Thursday, new opening trade, B plus grade. As a spread, I'd sell the 350 and then buy the 310. Picked up around $54 for this Microsoft trade. where we bought a call debit spread and then we financed it by selling 2 of the 340 put options. Then we sold 1 of the SPX call options as a 1 DTE trade, picked up $95. S&P down 108, VIX up over 10%. And then last Friday, which I actually think is November 1st, 2024, we opened up a new trade on TQQ where we picked up $100 in total. And we bought a call debit spread, and then we financed it by selling some naked put options. And then we also opened up a new trade in Amazon where we bought a call debit spread, and then we financed it by selling 2 naked put options with a strike price of $145. And S&P was up 23, and volatility was down. And then VIX was down around 5.5%, and VVIX was down 2.3%. So that's it for October and the first day of November. If you have any questions, leave a comment below. And if you want to take the 7-day trial, it's only $19 at beststockstrategy.com/memberships.